Welcome back to QuickBooks Online, and we're talking about payroll right now. Now we've got the employees in the system that we want to have, and we need to look at what we're going to do when it's time to input the payroll that we owe. So to do that, what we're going to do is use a journal entry. So we'll go to New and then Journal Entry. Now when it comes to payroll, dates are crucial because if you don't remit things and submit it to the government agency when it's due, it can be a huge problem for your organization. In this situation, what we're going to do is we're going to look at, we're at the end of the month, so we want to put the amount of payroll that we owe the employees. Now we're not going to pay them at the end of the month. They don't get paid until payday, which happens to be the next day. We need to input the information into the system at this time. So the end of the month would be one of those days that we would do that. So then we're going to do the journal entry. What we're going to do is, so the first one we're going to do is the payroll expense. Now let's look at the data for payroll first. For payroll. Now we're not learning how to calculate payroll. That would be a different type of a course, a payroll course. What's happened is this payroll has been calculated by our payroll department or our office administrator, and it's now ready for us to put into the system. So this is what we owe our employees at the end of this particular month. And we see the withholdings that we have from the employee's paycheck. So this is the gross amount of pay. Then we have the withholdings, and then the net at the bottom. This middle number is the payroll taxes. So we withhold Social Security, federal income tax, and Medicare from the employee to remit directly to the government agencies. And then we also match Social Security and Medicare as an employer. So at this point, we're just looking at the amount that we owe for the payroll expense for the employee working. We're going to do the payroll tax that we owe later on. So first we have the gross pay, and this is going to be our payroll expense, and the total for our 3 employees is $4,200. So this is the first time we're doing that, so we need to add this, and this is an expense. And the detail type is payroll expense, not the taxes, but the payroll expense. This is the part that we owe for the employee's work. We're going to keep the name as payroll because it's going to be in the expense section of the profit and loss statement, so we don't need to put payroll expense at the end. It's already set up to be an expense. So we'll save and close that, and we'll put the gross amount. Total is $4,200. So the next accounts we're going to use are the withholdings, what we're keeping out of the employee's paycheck. First we'll do the federal income tax that's withheld. So we'll need to set the account up. So we'll add a new account. The account type is going to be a current liability. We're withholding this amount from the employee's paycheck because we're supposed to send it to the federal government as their withholding. So it's important that we understand this is a liability, that this is our obligation. The type we're going to use is payroll tax payable. As you can see by the description, this includes taxes that you've withheld from employees' paycheck. For the name, we're going to set up this account to be federal withholdings payable. Save that. Our calculations when we did payroll for federal withholding was $630. So we'll put the account federal withholdings payable, and the credit is $630. Remember, this is a payable. That means it's an obligation. That means it's a liability, and liabilities are increased with credits. So now we need to do the same for the Social Security that we're withholding from the employee's paycheck. We'll have to add that account this time because we've never done it before. It will be there for us from now on. So this is another current liability. The reason it's a current liability, I hadn't said this yet, is because we owe it within a year. It's actually due in much shorter time than that. Then we're going to use payroll tax payable again because this is stuff that we're withholding that we're going to pay to the department, the Social Security department, and it's an obligation that the organization have, and we'll use Social Security payable as our name. When we did payroll, we calculated the Social Security that would be withheld from the employee at $260.40. So you can see that's going to be another credit. And then we're going to do the Medicare. So we need to add an account since this will be the first time. This one looks very similar to the others. It's an other current liability, detail type payroll tax payable, and the name is Medicare payable. The amount was calculated to be $60.90. Now the difference is what we owe the employee. Let's look at our calculations again. The employees get the difference between their gross pay and their employee withholdings. So that means that we have to pay the employees a check for a total of $3,248.70. That's when we add all three employees up. So this is what we owe the employees as far as the check that they're going to get on their payday. So we need to set up a new account for them. So this isn't a payroll tax. So what we are doing is we're going to call this other current liabilities as the account type. The detail is still other current liabilities. The account name we're going to call payroll payable. So this is what we're going to eventually write checks for directly to the employees. We call that the net amount that the employee gets, sometimes also called the take-home pay. So the account is payroll payable. The credit amount is $3,248.70, and we can see that our debits equal our credits. We've now put the payroll into the system at the end of the month, and then we're ready to pay the employees when payday comes up. Save and close.